Luke is a broker associate at eXp Realty and founder of 9 Mile Capital. He has flipped hundreds of houses and now invests in commercial real estate, including multifamily, retail strip centers, and his personal favorite, self-storage units. So Luke currently has over 1,200 storage units under management right now. So we can't wait to hear about this little niche. So go ahead and take it away.
Thank you, Chris. Thank you, Jamie. Let me go ahead and tell you a little bit about myself. So I started off in the single family residential house flipping in about 2011. But before that, I was actually doing land development in Houston, Texas, 2001, doing residential land development, land acquisitions. And from then, 2011, I did house flipping. And actually, Brant Phillips was one of my first contact in that area in regards to he was our contractor. So it's very good to see the growth of Brant, and just we collaborate the last few years, and we've been following each other. And then I got into wholesaling. Before I had a brief health crisis, 2016, 2017. So I was pretty much out that year. When I came back to it, the market was a little bit different regarding what houses I was renovating and flipping. The market had changed, oil prices had gone up, the area had flooded. So what I had done was go ahead and open a wholesaling operation to kind of see where exactly I wanted to fit back into the whole realm of the real estate game, and did that for about a year. And then I started dabbling into commercial space regarding different asset classes passively. And I picked 3 different asset classes and 3 different operators to try to find out which asset class I liked, which management style I liked. So we did a shopping center in Houston, we did a storage facility in Conroe, Texas, and I did an apartment complex in Dallas, Texas. What I was going to show you was the different asset classes that I had invested in, and that gave me a good idea of what goes on behind the scenes of commercial real estate. Like the shopping center is 130,000 square foot shopping center right there, or 59 in Houston. I was able to find a syndicator that was putting that together. I really liked his style and what he was doing. You guys probably know Alan Schnurr, so he's in Houston, Texas. So that was my first passive investment deal. And that way I got to see kind of behind the scenes, the financials, how the syndication works, how they manage the property. And then I went ahead and also got into the apartment complex in Dallas. Multifamily was a very interesting aspect. I mean, it was very busy. The prices of per door were going up, but people are really still making, tons of money. And the third one was a self-storage facility. I had to talk to my attorney at that point, and I asked him, any investments or anything you're hearing recently regarding real estate investments. He's like, I have, some friends that I know that I'm investing in their storage facilities. So I got in touch with them. I invested with them, and it was a storage facility in Conroe. It's a bigger group that had 15 plus facilities all around Texas and some other states. And I got to see behind the scenes of what was going on there with their financials, how they manage and how they syndicate. So I wanted to go ahead and really narrow in on one. And the one that I really, really meshed with, my personality, and just really fell in love with how everything worked, was self-storage. Basically, multifamily was close second, but when I put myself in the shoes as of tenants and toilets and management, the management requirement for self-storage was a lot less. And I put myself in the shoes as, if the management company or manager got sick, who's going to have to step in? That's going to be me. So that's going to be me, and I really don't want to be an apartment manager, and that's just not my personality. Now, a self-storage facility, I can deal with that because a lot of it is um, very low maintenance in regards to management, and a lot of it's automated. And also, so that was one aspect. And then once you think about if you have any casualty losses, such as a fire, apartment complex, you're going to displace some people's homes. Hopefully, nobody gets seriously injured. Self storage, I mean, it's basically their stuff, which honestly, a lot of people haven't probably been to their self storage facility in months and probably don't remember what's even in there. And also, when you go to the fact that you have to evict or take to auction, it's a little bit less drama taking a self-storage facility to auction within 30, 45 days than evicting a family or single mom with, several kids. That's something I really prefer, the self-storage industry in doing that. So that's kind of the reason I chose that industry. I mean, it's very recession resistant in the fact that when times are good, people are moving into bigger homes, or they have more toys to store their ATVs, their campers, and then when times are not so good, they are maybe doubling up and living with a family or downsizing. They need to store. So either up and down, and actually during COVID and pandemic, some of the operators have really found that was one of their best years. So, I mean, other than the first few weeks or months, the occupancy has not been really affected by COVID. Um, so, and I'll go ahead and start off and telling you. So I chose self storage. I went to Scott Meyer's Academy, and weekend. It's a 3-day weekend. He's out of Indianapolis, and Scott Myers, you can see him, has a lot of online presence. Also, he's been in it for a while. He's been in apartments. He's been single family, and really, really neat guy and really giving. And I'm also a part of his mastermind. But that 3-day event really jump started me into taking action into now trying to acquire a self storage facility myself and actively run it. So I know probably a lot of you out there are wholesalers or flippers. So I came from that background, and I used a lot of the same skills that I use for houses for the self-storage facilities. Now I am concentrating on secondary and tertiary markets. So my area is probably within a 2-hour drive time radius of Houston. My first facility is in Orange, Texas, right there, a little past Beaumont, probably about an hour, 45 minutes. It was, I had done a mailer. I still like the housing wholesaling days. You still get a list, and that list can be provided by companies like Info USA or Atom Data, or better yet, I go ahead and go on Google Maps and I search self-storage facilities and zoom in on their facility and get their information, and also see if that's the size I want to get into. I don't want public storage downtown Houston, too big. I don't want to compete with those guys. That's like competing with Walmart and Home Depot. I don't want something too small where it's just 10 units, where I'm going to have to spend the same amount of time dealing with 10 units than I am 100 units. So those are a few ways that you can find your self-storage facilities other than what's listed and on the commercial MLS or LoopNet. So I sent yellow letters. Yellow Letters HQ is actually where I send my yellow letters from. simple yellow letter. My name is so and so. I'm looking to buy a storage facility. Are you interested in selling? I can, close quickly. And so I did a few rounds of those, and I got quite a few responses. The response rate, again, there's not as many single family storage facilities as single family. So you're talking maybe about 80,000 facilities in the US. So you go through the list pretty quick, but the response rate is a little bit higher. Now, when I stopped single family, I was probably getting less than 0.5% on the mail. And I'm probably getting 2 to 4% on the mail with storage facilities. Although, again, it's really gotten a lot busier in regards to other people coming into the market. So the yellow letter went out. I got a call from this lady that had a storage facility in Orange, Texas, wanting to sell. Her and her husband were retired, and they lived right next door. And they were getting ready just to, again, go a little bit better into retirement and for less things to do. So we spoke. I ran my numbers. I visited facilities, and things that you want to really look at when you're looking at facilities. Again, everybody's different. I'm looking at tertiary, secondary markets within 2-hour radius of Houston. There's different scenarios or different guidelines per se that people use. You got to have 50,000 people in the county or within the 3 to 5 mile radius. You've got to have them, spending or making $50,000 and up. There's different metrics. And while those are guidelines, those are not, absolutes. So I found this facility is all climate controlled. And if you can look at it, I'm sorry, I wasn't able to share the screen here. If you go to storewestorange.com, so STORE, westorange.com, you'll see that facility. It was sitting on less than an acre, 0.8 acres. Had 2 buildings, both climate controlled. One building was done in 2008, and another building was done in 2017. 135 climate control units. The thing was probably like 90% full. They had a lady on staff full time, and the place was in very good condition. And then it had some room to grow next door, which I've since recently put some portables in. I've added 24 outside storage units. So we can talk about the numbers. So that facility, I bought just a little over $1 million, but I got seller financing. And that's another thing. That's, just the wholesaling, rehabbing days. It just kind of it's really the same game, just different asset class, and then maybe a little bit adding a zero here and there. But if you think about it, 20% down. I was fortunate to have the money to put that down payment in. I had some 1 or 2 family members I wanted to get the experience, so they chipped in a little bit. But so basically, this was taken down all by myself, no syndication, 20% down, no banks, and I had a great rate. It was a 5%, 25-year amortization, 7-year balloon. And the thing cash flowed day one. Day one cash flowed, and what I did for getting that facility, I wanted to lower expenses and increase rent. So right away, we went ahead and talked to the full-time staff and told her, at this point, we can't keep you full-time. But if I do need somebody, to check out the facility in conjunction with me, and I could pay you a certain amount, per month, which, was, a lot less than having her full-time. She was able to get a full-time job somewhere else. Now this is just extra kind of pocket money for her. but it's great. She lives 5 minutes away. If I need something, I also have a handyman that's 5 minutes away. So right there, I was able to cut, you know, $1,800 to $2,000 a month in expenses. Um, and as you know, in commercial, everything is kind of related on the net operating income. So not only can you improve the value of the property itself, but also you can improve the operation and net operating income, which is your gross income minus your expenses. And that's before any mortgage. And once you can up that, then the value of your property also goes up because people are buying on cap rates, and basically they're buying an income stream. So if you can increase the income, lower the expenses, the more valuable your property is. So great deal. Found it off a yellow letter. Got owner financing. I even got a testimonial from her on video. I haven't used it yet, so that I can use for other people, other sellers, to look at the perspective of owner financing. So let's put that in perspective of single family versus like a commercial property. Same type of hunting, same type of letters, same type of talking. It's just instead of $100,000 house, now you have $1 million property. But that 20% down, 200,000, or 20% down, 20,000 for a house, it doesn't have to be yours. In my case, it was mostly mine. But just like in single family, there's ways to partner or get creative and to get that down payment. So in essence, if you can do it with single family, you're just adding, one or two zeros. It's the same aspect. There's no reason. I do know people that have actually gone in with $0 in regards to down payment wise because they've had either they syndicated it, or they've reached out to outside investors, or they've partnered. So just there's that fair. I had it just as we go into something new and something with a little bit more zeros. But when you break it down, it's very, very similar. Just as in when starting out rehabbing and rentals, it was the first one's scary. Just like first time you go in bungee jumping or anything like that, it's the first time is scary. But then it just gets more and more used to it. So they give you a kind of idea of the numbers. So this thing is, I bought it for a little bit over $1 million. It's bringing in between $16,000 gross. My expenses are about nine to $10,000 a month, and that's including debt service. So we're talking about 7,000 net cash flow. And again, I'm still tweaking operations. What I've done also in regards to not having a full-time staff, I've put in automated locks where I have total control from my phone or laptop. Basically can open and close the doors, and everything else is mainly managed by the website. So when you go to West Self Storage store westorange.com, you can see the website. Within like four steps, you can rent a unit. You can pay your bill online. It automatically gives you an access code, gives you instructions. So I mean, I have tenants that I've never spoken to, and they've just did it rent online, and they pay online. And it's the occasion where somebody forgets their passcode, or they need to make a payment by phone, or they have a question. But other than that, it's the management intensity is very low, especially once you get it full, and it's now just maintaining itself. You maintain the property, you maintain your storage guests, and let the website do its thing, the automated entry systems do its thing. You're managing it by the analytics on your website, storage, operation manager that's integrated with your website. You're looking at the security cameras. And of course, I'm visiting the facility. I'm not that just kind of let everything go, where I'm always going to have my finger on the pulse. So, especially with COVID these days, a lot of people don't want to meet anybody, or they don't want to touch, like for instance, we have touchless entry where you can just text open to the phone number in our system and the doors will unlock or let you in. That way you don't have to touch the keypad that anybody else has been touching. Like I said, recently we put the portables out there, which are portable storage units. It's like a container, but a foldable container that they come and drop it, and they kind of erect it on site, and it's movable. I mean, a forklift can pick it up and move it. So why we chose those, so it's an 8x20 box, and then you put dividers in there, and so it's 8x10 units, 2 8x10 units that come into that one box. And the reason we did that is, one, I don't have any outdoor storage, so that gave me some outdoor storage, and I could phase this in. I don't have to build a separate storage facility at once. I put these first 24 in, and then I can come in when those are full, put the next 24 in. And if I need to move them later on, we can actually relocate them to a different facility or rearrange them on site. If I, for instance, I mean, Chevron is building a big facility. Well, they actually own the land already, so they're expanding their operation. If I need to take those portables off and take them to an existing site, another piece of land that I would own nearby, and then actually build on where the existing portables are, I could do that, and I could go instead of one story, I can go 2 stories. So that's another nice thing about portables. It gives you the flexibility. Also, it doesn't count as real property, so it's not increasing your tax value of your land and building because it is considered personal property. You can put these on, depending on the city, sometimes you can put them on easements where you cannot build, because if you ever need to move it, you can move the portable building. But then you also have challenges also with the bank, whether they're going to finance your operation for that section of storage facilities, because it is a portable unit. Some banks will do it, some banks won't. So now to bring you to the next phase. So this was October 2020 when I took on this facility. Now, October 2021, the importance of getting educated, networking, and taking action and partnering. So this next one, I partnered with another fella he has a kind of a nationwide operation, and great guy, great bunch of people, and we were able to take this new one down in Magnolia, Texas, $6+ million, quite a big difference from 1 million. Same premise, no syndication, just partners. And this facility was built in 2017, 5.23 acres. It has about 2 acres left to expand, so we will be building on that soon. It has a retail office up front that the old manager had used it as a self-storage facility. Has 3 office warehouse rentals, and then the self-storage facilities in the back. Climate controlled units, 70% of them are climate control units. There's a total of 290 units, and It's a great property. Magnolia is really expanding. I've since the 3 office warehouses are full. Now this retail unit, again, I automate everything, so I don't need a big 1,200 square foot office with a full-time staff. That we are actually negotiating with a doctor to lease that building out. So the whole front part of it will be leased out, and now just focusing on the day-to-day storage operation. But so that's where I'm at now, and I'm always looking to help others and even partner with others, collaborate. There's a lot of great self-storage groups on Facebook. You can go ahead and go into those if you're looking to learn more about self-storage. We have a Clubhouse chat room. It's audio only on the Clubhouse app every Tuesday at 9 a.m. Central. I'll go ahead and actually give you my email. It's Luke at 9 Mile Capital. Luke at 9milecapital.com, and the 9 is the number 9. And my phone is 713-882-5957, 713-882-5957. And you guys feel free to reach out to me if you guys have any questions. And sorry I wasn't able to share some of the pictures, but if you go to westorange.com or storemagnolia.com, you'll see the 2 facilities that I'm talking about.
Awesome. Thanks so much, Luke.